Hi, everybody. Jon Sharp, Hardenbergh Insurance Group. Thanks for joining us again today. As you know, we're here because of COVID-19 and how it's been a serious market disruptor for all industries, big and small. We think it'd be great and helpful to all of our clients and our friends in the community if we connect you with professionals in specific areas. So today, I'm especially excited to bring Tom Kleinhans. He's a senior associate specializing in the CARES Act at Bowman LLP. Bowman is a full-service accounting practice specializing in commercial, governmental, and nonprofit, and they're headquartered in Voorhees, New Jersey. Welcome, Tom.
Thanks for having me, John, at Hardenbergh. My name's Tom Kleinhans. Just to reintroduce myself, I'm a senior associate at Bowman & Company, and all the loan and grant programs in regards to the COVID and CARES Act, minute by minute, day by day, as me and John discussed before, things are changing. So we're going to try and get you the most up-to-date information in regards to what we know at this point, and going forward, we'll try and continue to update you based on new information that is provided by authorities and by the SBA.
That's great, Tom, and I'm excited because this is the hottest topic right now.
Yes.
We're recording this, and today is Friday, the day that the CARES Act has been released and given the ability to apply for loans. So let's start with the loans. I know there's several that are part of this act. Tom, can you tell us what loans are a part of the CARES Act?
So in regards to eligibility for the PPP program, small employers need to have less than 500 employees, unless you're in certain industries that qualify for larger than 500 employees. Sole proprietors and independent contractors also qualify for the PPP program. Application-wise, they may have to apply at a later date than other businesses who qualify for this program. There's no collateral that you need to put up in regards to the PPP program. And it's almost a good faith certification that these businesses are giving to the banks and to the SBA, who are providing the funds to the small businesses. The loan's unsecured. Again, there's no personal guarantee required. And in regards to the loan amount, because that's what we're getting to, and that's really what the employers need right now. It's 2.5 times your average monthly payroll cost. So a lot of people are asking, what are your monthly payroll costs? And as of right now, there's been a ton of guidance and literature that is out there. And we were looking at a final ruling that came out yesterday on April 2nd. And they're including payments to independent contractors, your gross compensation, your employer 401k plans, health insurance premiums.
Okay, great, Tom. Can you tell me, are there any salary provisions that are tied to the payroll calculation you just gave?
Yes, so in regards to the payroll calculations, the maximum payroll that you could use for one employee is $100,000. Also, when you look at your self-employed individuals or independent contractors, and you're using those funds in the calculation, the maximum payments to an independent contractor is $100,000 as well.
Can you tell us how there's going to be forgiveness tied to these loans from the government?
Yeah, so as of right now, they're saying once you receive the loans, you're in an 8-week period. So based on the calculation of what the proceeds are, it's 2.5 months. So if you look at 2.5 months, that's usually 10 weeks of proceeds. Now you have an 8-week period to use these proceeds. So it's not just payroll that you can use these proceeds on. You can also use them on rent, on utilities, mortgage interest, and other business interest. And those funds would be forgiven once the application of forgiveness is received after the end of the loan period.
Are there any provisions that would stop an employer from being forgiven for the loan?
So if you use all the funds on the qualified costs that we talked about earlier, there's only one provision that says, why wouldn't 100% of the loan be forgiven? And as long as you spend at least 75% of the proceeds on payroll and the other 25% on the other qualified expenses, then everything's okay. But if you use over 25% on the other qualified expenses like rent, utility payments, and mortgage interest and other business interest. So for example, let's make an example. You have a $200,000 loan from the PPP program, and $60,000 is used on utilities, on rent, and on mortgage interest. Since that's over 25% of the loan you receive, then a portion of that $200,000 that you spent would not be forgiven.
Let me ask you one last question before we end here, Tom. I see you're working at home. What's your favorite work at home activity?
I don't know. There's a lot of good things that you can do from home. Taking a coffee break with the girlfriend always helps, because now, I mean, I see her every day, and we always talk about how we don't spend enough time together, and now you get to spend as much time as possible together. We still like to keep our own rooms because we can still focus on the work at hand.
So Tom, if someone wants to get in touch with you about all the information you just shared with us, what's the best way for them to do that?
So you could send me an email at tkleinhans@bowmanllp.com. I'm open for any questions in regards to any of the types of grants and loans. Again, there's always additional new guidance coming out.
Great. Thanks so much, Tom. Appreciate your time and appreciate all the information. Have a great day.
Thanks for having me, John. Appreciate it.